John, are you there?
Yes, sir. How are you, Peter?
All right. We got a bit of a satellite delay there, John.
I just had to unmute.
That's all right. I thought it was me. I thought you couldn't hear me. Right. Can everybody hear me and John okay? Yes. Okay. So what I'll do is I'll just introduce this first. It's going to be, I know some emails said 12 p.m. Bangkok time, but they'll all get the recording anyway, pretty much straight after this. Right. What we're going to talk about today is risk and reward and a number of issues that both myself and John see quite regularly. The reason I've got John along will be clear shortly. Now, one of the things that you hear a lot is, if you fall off a horse, just get back on the horse. And I see a lot of people doing that in trading. They reset their sim accounts. They just say, well, I won't do that again next time. But they don't go back and check the saddle. They don't how did I fall off the horse? So I get this. I love, when people say it's not how many times you get knocked down, it's how many times you get up. But you do need to start, you do need to start avoiding the punches at some point. So we're going to talk about three related scenarios that I think is probably the best thing, or trigger points that probably all of you are going to recognize. And you'll probably recognize some of the things we talk about. You might not have actually seen them as specific issues. And in theory, they're risk related. And one of the reasons that we've got John here is because some of these, it's not really financial risk for a lot of the time. And the three things we're going to look at is increasing risk and the way that impacts people, getting close to a long-term loss limit or a blown account, and also getting close to a goal. Because in all of those three cases, and we'll talk about what a goal means. It might be a financial goal. It doesn't have to be a financial goal. All of those three cases, people revert to behavior that guarantees the worst possible outcome, right? So getting close to a loss limit and getting close to a goal, the loss limit almost acts like a magnet, but unfortunately the goal doesn't. And that's kind of strange, it's kind of a bit unfair because John's got a few different sides of this game. Now, John, if you don't know, John Hoagland is at Topstep. John's the person that gave me a tour of the CME floor and the S&P pits along with Mike Patak. And you know everybody there. So John's an ex-floor trader. John, do you want to just introduce yourself, tell people what you've done and what you do now?
Well, sure. Thanks, Peter. Thanks. First of all, thanks for everybody for trusting us with your time today. We want to make something impactful for you today, so I'm looking forward to that. But I've been in the futures industry for about 38 years. I started as a runner on the trading floor, worked my way up. My dad was on the floor of the Chicago Board of Trade for 40 years. So, being a young man, I had to make my own way. So I went to the Merc. But I, was a runner, worked my way up there. I had the opportunity to learn the futures industry in a safe way, just working on the trading floor, talking to professional traders, learning from them. I had a lot of great, honest, wonderful, hardworking people that taught me the ropes down there, and got hired as a proprietary trader and did that for a while and funded my own account and was a filling broker in the S&P pit for, I don't know, I guess about 15, 20 years. About 2009, the opportunities in the pit started to really dry up. So I decided I was going to step out of the pit and start to learn to trade on screen, which I've been doing ever since. But since 2011, I hooked up with Topstep, and it's been just a blast to help grow the company and to have the opportunity to talk to the thousands of traders and, hopefully help them improve their performance. It's something that I really enjoy. So, and still here today.
Yeah, thank you, John. So John's got a little bit of experience, is what he's trying to say. And so we're going to look at these issues, and we're going to look at him. John's going to give his experience. He can give us his experience before Topstep, but the stuff that goes on, the way that people react on Topstep accounts is very interesting. And again, we'll get to that in a second. And today what we've got, it's a bit, excuse me, got my slides. It's a bit like, what we're going to do today, it's a bit like trying to build a trading muscle, but it might be a trading muscle that you don't have yet, or you don't know you need. So I know from the prop world, where they'll get a guy, the bricks and mortar prop world, there's an absolute expectation that when that trader goes from sim to live, his performance will immediately go down. And And that's not a one-off thing, right? So he goes sim to live, his performance goes down the toilet for a little bit, not permanently, but then maybe they give him a clip size of 3 contracts, in his 3 to 5 contracts in his first live account. If they go from 3 to 5 to 10, his performance will go down. Go from 10 to 20, performance goes down. 20 to 50, performance goes down. Now, I presume at some point they get to the point where they don't have that effect, but it's just absolutely expected, right? Now, you can probably relate to that going from sim to live, right? But what I've seen in the, I've seen the prop world is interesting because what John does is it's not really risk in the same way that a live account's risk. So really this is it's perceived risk and not actual risk. So apart from John's pit experience, he's got some very interesting insights from how people behave on the various stages of the Topstep program and the way they have these similar kind of reactions where you think maybe they shouldn't react in the same way because it's not really the same scenario in terms of risk. Now, if you look at you guys at home, you're risking your own money. If you look at guys in prop firms, they're risking prop firm money. It's not their money. And the Topstep have this 3-stage program. So John, before we go into this, could you just tell me what the stage 1, stage 2 stages are? And then the funded stage, I think we know, but like, what is the stage 1 and stage 2? Could you just explain that?
Topstep?
Yeah.
Okay. So step 1 of the trading combine is a little bit more relaxed. We want people to be able to kind of build their process and their strategies. In step 1, it's more about finding profitability. Of course, there are risk rules. There's a daily loss limit, a max drawdown loss limit. We do want to see a couple of numbers of days, at least 5 in step 1. And then once you're successful in step 1, you'll move to step 2, and there's some additional risk requirements. You still have the daily loss limit. There's a weekly loss limit. We have a new consistency score where your best day has to be less than 40% of the total profits that you make. The daily loss limit, trailing max drawdown is still there, a weekly loss limit. There are specific major economic releases that we want you to be flat for in step 2. Just to, sometimes we might just get lucky. And what we're looking for are consistent and profitable traders. There's also a scaling plan in step 2 that you have to build your account to be able to add more contracts. It's the same way in the funded account.
So here's the funny thing, guys. To me, that sounds like it's 2 stages of the same goal. So just effectively, John, it's 2 stages in going to the same goal of funding, right?
Yes.
So there's no more risk. It's gone. Sorry.
No, go ahead, please.
Yeah. So in theory, there isn't any more risk in trading stage 1, step 1 and step 2, right?
Well, there is, because there's 3 different account sizes. There's a 50K, 100K, and 150K. You are paying a subscription fee for the evaluation. Should you break a rule, you can pay to get your account reset and then continue to move to work on being successful at it. So with this slide up here, can I talk about the slide?
Sure. Yeah.
Okay. All right. So with the people that I talk to, many of them are they've never really traded real money before. Some of them have made and lost a lot of money. But they typically, lean back on sim to work on their strategies and to get themselves prepared for actually trading. And I kind of liken sim to a balance beam that's laying on the floor. Now, most of us, if we're able-bodied, we could probably dance across the balance beam as it's right on the ground. There's very little risk of falling off and hurting yourself. Getting into the trading combine offers that degree of having a bit of skin in the game. There is a little bit of risk in the fact that you are paying for the evaluation. If you do break a rule, there's a cost in resetting the account. So that raises the bar a little bit. You've got a couple 2 feet off the ground. it's the same process, whether you're in sim or in the trading combine. People come to me all the time and say, I was really easy in sim. I thought that this was going to be a piece of cake. And when I get to the trading combine, everything's different. Everything is harder. And the reason for that is you have that skin in the game. There's a little bit of duress in everything you do, and it changes your decision-making process. Going from the trading combine to the funded account where you're trading our money, it's again a higher bar. It's the same process as dancing across it when it's on the floor, but now it's 4 feet high, and if you fall off, you run an even greater risk of injury. But it's the same thing. It's the same process. If you can dance across it on the floor, maybe you can dance across it when it's 4 feet high, but you're going to have to get used to the idea of that risk before you're going to be able to do a backflip on a balance beam.
Yeah. Now, one of the things we talked about a few weeks ago was the way that some people, they go through step one, they get to step two, and they completely change the way they trade. And it seems a weird thing. So what are the kind of things you see? People get from step one to step two, and then there's an irrationality to their behavior, right?
It's because there is that risk. Now they feel like they're in a position to make real money, and they want to make a lot of it. So whatever strategies, whatever process they used to get to the funded account, they tend to abandon in the hopes that they're just going to hit something real big right away. And most of the time that's not going to happen.
And is that a lesson they learn the first time they do it?
Usually, yes. Yeah.
Okay.
And that's one of the beauties about Topstep. I mean, if you're at a prop firm and you don't succeed there, you're going to be out the door and you're not coming back. Topstep, you have the opportunity to earn the funded account over and over again. So you can develop yourself into a trader. So, when you're talking about a prop firm, when they're going to 5 contracts to 10 contracts and then to 20 contracts, if you ask me, that's a lot of pressure to put on somebody. I tell people all the time, you trade 1 or 2 contracts until you are successful and consistent in that. And then think about adding 1 contract, because that's going to change your decision-making process because of the increased risk.
Yeah, but it's irrational. Because really, so we had a guy in here on the group therapy sessions. You're saying, no, it's right and it's not. I mean, money is just a number in a bank account, right? It doesn't really exist. And it is irrational that you would behave differently or go off plan just because there is now a different number on the computer screen, right?
Well, I've talked to a lot of people and asked them, what happened? Your process in the trading combine was consistent, and you had great reward over risk. You got into the funded account. What happened? Well, there's a lot of things that change the decision-making process when that happens. For example, one of the things was, well, I got through the trading combine, I got to the funded account, and I really wanted to impress you guys.
Yeah.
You want to impress us, stay with your process.
Make some money.
Make some money.
Yeah, it's interesting. Very interesting. Now, what I'd say before is just go to another one that's you guys will understand. Now, guys, have any of you experienced this adding risk? Or and let me just go back and just look at the title, actually, because it's not just risk, it's risk and reward. I don't think people look at this and say, if you're taking more risk, then you're going to behave erratically. But I also think if there's more potential reward, you do the same thing. I mean, it's kind of greed, but it's also, I mean, if you look at how long a lot of people, there's people that do a lot of these combines, John, and they finally get close to it. And just getting close to it, it kind of tips them over into that also tips them over, where you think, like, if you've got a loss limit, right? So let's say you're on the wrong side of a combine and you're like, I know, I don't know the exact rules, but let's say you're $500 away from blowing your combine up.
Yes.
My take is when people do that, they accelerate into that level. They lose faster and faster and faster until they blow it up.
Yeah, and that's absolutely true. In my experience in talking to traders and even some of the accounts that I've blown up, it's a desperation. You get to a point where you just kind of seem to capitulate. Some people, I actually think they have a self-sabotage that they fall into because they're not doing well.
Yeah.
They get upset. They're down on themselves. They're down on the account. They're down on trading altogether. Maybe maybe sometimes they even consider in very, weak moments, oh, I just can't do this. I should just walk away. But I'm just going to take this last trade and I'm going to leverage into this one because I'm probably going to lose the account anyway. So, let's just see what happens. It's that capitulation that tends to happen when you are under that duress and under losses like that. We all experience losses. Peter, you do, I do. Everybody that trades, experiences losses, and it's angering, it's aggravating, it's never pleasant. It's part of trading. But until we understand that this is just part of the game, we start to blame ourselves. We start to say we're no good. We can't do this. We attach our P&L to who we are as a person, and nothing could be further from the truth.
Yeah. And do you let people reset if they haven't? So let's say somebody's in a position where they've got a combine, but they're so close to blowing it up. Do you let them reset at that point, or can they reset at any point, or is it only once they've kind of hit a limit?
They can reset at any point, and every subscription rebill, if they are unable to be evaluated at that point, if they've hit a rule violation, they'll get a restart at rebill.
Okay, but they can, because here's the thing. Let's say you've got 100 people that are so close to like their loss limit, the combine's going to go. How many of them actually reset at that point versus either swing for or versus just blow it, just go and blow it up?
Well, I don't necessarily have that statistic. However, the people that I work with on a more personal basis, I feel as though if they can get themselves into that situation and get themselves out of that situation, they're going to end up being a better trader.
Yeah.
My dad was a trader. He's got lots of wisdoms, and one of them was, well, the hotter the forage, the harder the steel.
Yeah. But I agree with that. But isn't there some point? So what would you advocate? Would you say to people, don't reset it. You should try and work through it. And because what I believe is, in that case, if you swing for the fences, you're gonna hit it and you're gonna end up disappointed. If you because some people will swing to the fences to try and bring it back, right?
Right.
Yeah, and that seems pointless to me because you're probably gonna lose.
Right.
Some people just seem to go into self-destruct and just throw their plan away.
Yes.
Which also is going to be a negative experience, right?
Yep. Even if they pull it out after they've given up, after they've, abandoned their strategy, if they pull it out, that's actually very detrimental to a trader. The next time you're in that situation, you'll remember that and you'll try and do it again. And as well as I do, Peter, 99 times out of 100, it's not going to work.
Yeah, well, so some people do it in such a way that it works 99 times out of 100, but the one time it doesn't, they lose their house.
Yep.
And I can see because I think I think the only way you can I think the two, to me, I don't think there's anything wrong with saying, you know what, I need a clean sheet. I don't think there's anything wrong with that. I also don't think there's anything wrong with like trying to claw it back, as long as you don't do it by swinging for the fences. But this idea, I mean, I get a lot with people. I got one guy and he trades live, but then when he decides the conditions are not good for trading live, he trades sim. And we call them pawn trades. And he's probably listening, Daddy, sorry. And we call it pawn trades. And I said to him, why do you trade sim in that situation? Because you're going to lose. So you're in a situation we've already decided it's not a good day to trade live. You've had a few knocks on the chin. You've got the discipline to stop. And now you're going to trade on sim and lose money. How is that going to, it's just going to be a negative experience, right?
Yeah. And we going back to sim, I try and remind people that you can create some pretty bad habits on sim because there's no accountability. You just throw things on there, and if something works, you'll remember that the next time you're in that situation live. I'm looking at the S&Ps today, and I said this morning, I said I don't really see that there's any great opportunity, so I haven't done anything today.
Yeah.
It's been a very small range day. There hasn't been great opportunity. I kind of put that in my head before, but I'm not just going to trade sim. I'm still monitoring for opportunity, but until something changes today, I'm not doing anything. We're in rollover. There's what's going to happen.
I know. I was wanting to be one of those guys who just came in for the rollover. Thought it was the best job in the world.
Well, yeah, if you were working the spread during rollover, some of those guys were printing money, but only 2 weeks every quarter.
Yeah, it's great. It's a great job. But so from my perspective, I think this is weird to me. So when I say a loss limit, guys, what I don't mean like your daily loss limit, although it could be a daily loss limit. But this isn't talking about one trade. This is talking about having there's a line in the sand there that you create or Topstep create, or you're close to blowing up your live account, and it's there and it's just pulling you in. Have any of you guys experienced that?
Well, I have.
Well, yeah, we got the chat. I'll pull the chat. Can you see the chat if you open the chat up, John?
Yeah.
Don't be shy, guys. Let me just everyone. Yeah. Only Steve Lee. Everybody else is perfect. Anybody seen that, guys? That you've got a limit there, and it seems to pull you in. It's like the Death Star. And how many times, guys, have you tried? How many of you guys have been in that situation and actually took a step back and examined what you're feeling at the time? Have any of you done that? Because here's the thing, John. This idea that you just get back in the saddle, to me, this is an experience that is very valuable. So Zach, good for you to say now. So Zach, if this happens again, you get close to a limit, look at what's going on. What's the trigger for, Steve Lee had to go for a walk. Steve doesn't walk anywhere either. He's American. So, but what I think one of the problems that people have, I mean, obviously you coach people, John. So, sure. But you also see the people that you don't coach, right? And there must be people that just do it over and over again. Do they, is it just not a natural thing to step back and look at this stuff? Like, why are people just shrugging it off as if as if they'll do better next time without looking at it?
Well, it's there's a lot of theories, and I've got a lot of theories about that. In order to change an outcome of something that you do regularly, if you don't like the outcome, you're going to have to change some of the things that you're doing to change that outcome. If you do the same thing over and over again, you're going to get the same outcome, and that's basically the definition of insanity. But it's not easy to do. The easiest thing to do is to just continue to do what you're doing, because that's what you know what to do. That's what you know what to do. Even though the outcome isn't good, it's the easiest pathway. If we're going to make changes and improve our performance, we have to improve our fundamentals, basically, just like in baseball. You have to change. You have to take a look at the tools that you're using. You have to be very good with the tools that you're using. Sometimes maybe we overcomplicate things. Sometimes maybe we're just not looking at the tool that speaks to us. These are all things that come with experience. And I think there are a number of people that really kind of treat this as a hobby. They just think it's kind of fun to be able to participate. And I don't think that they ever really have the expectations or give themselves the chance to succeed at this.
That's so funny, because I think that's absolutely, I think some people just like to lock themselves in a separate room from the wives. Yeah. And then that's not a joke. That's not to make anyone laugh. I think that's true. But I also think there's some older people that are retired and don't really have anything to do. Yeah. And but I think you're right. I think there are people in this that don't really want to ever go live.
Well, in that case, they should pick up golf.
Yeah, but you can't play golf at night. You got to talk. It's this or talking to the wife. But anyway, so I didn't mean to interrupt, but that's a good point. But carry on.
No, not at all. So, this is a very, very difficult thing to do. We all know that. Jim Dalton even says, and I would agree with him, there would be a lot more successful discretionary day traders if they had more time or they had more money.
Yeah.
Because by the time you gain the experience and the intuition and you learn the tools and the things that you're using consistently to find context in the marketplace to help you put a process together that's going to at least maintain an account for a year, it takes time. This is a profession. It's like being a doctor or a lawyer. They pay a lot in tuition to become a doctor or a lawyer, and there is a long learning curve to be able to be consistent and profitable in trading.
Yeah,
it doesn't. I've never known anybody that's done it in a week. And now
you haven't
that
bought the
we're
right
all-
course, John.
Yeah, right.
God, sorry.
It's all right. It's all right. So, this is there's lots of small degrees of success before you even become profitable. Watching your metrics, you get to a 2-to-1 reward over risk. Even if you're only right half the time, you're going to make money. And if you can do that over time, continue to learn about how markets work, how we work internally and emotionally and psychologically, you can buy the time to get good enough to start making some real money at this. It does take some time though.
Yeah, absolutely. But I think, we're doing this series with a guy called Soon, and Soon is a fairly new to trading, certainly new trading at the order flow. And, the first session we did with him, it was like really trying to reset his expectations and stuff. And the second session, I said, what do you think about the first session? Because he went to the first session basically thinking, 1 session, 2 sessions, Pete tells me how to trade, then I do it. And like at the end of the first session, without trying to burst his bubble too much, I kind of burst his bubble a little bit. And in the next session, he said, I really expected something more substantive, which is an absolutely fine comment to make.
Sure.
But people see people like this stuff here, having a loss limit that pulls you in like the Death Star, whatever it is called. What's it called? Tractor beam. It's a really big part of trading, right? And if you're close to loss limit, like if you got a $10,000 account, you take down to $1,000. You either need to me, in my opinion, you need to either top it back up to 10 or take the 1,000 out and spend it on something.
Yeah.
I don't think there's much. Go on, sorry.
Agreed.
Yeah, because that level pulls you in. Now, the funny thing is, a loss level pulls you in, and then targets they repel. Yeah, and it's like it's not fair, right? Now, the funny thing about these targets, it's not really risk. So Danny, the guy I was talking to, he kept behaving badly. And what I said to him, I says, look, okay, we do this. We'll set up. What I tell people, John, is that, I say, if they're on sim, what I'll say to them, if you're on sim and you want to go live, what you have to do is imagine a friend was coming up to you and said, I need you to loan me $50,000. And you say, why? He said, well, I'm really good at sim trading. And if you give me $50,000, I'll trade it live and make a lot of money. And I will say to people who work for me, this is your best friend. You can't just turn him down, and you've got the money. But what would you want to see from him before you give him 50 grand?
Results.
Yeah, well, you want to see. And when they tell me, and I say, whatever that is, that's what you need to see from yourself before you go live. Now, Danny, we did this I did this with Danny, and he wasn't going to go live on a massive account, but we set up some meetings, and he got to day 30. All he had to do was make it through day 30 without certain behaviors coming in. Guess what happened on day 30, John? Blew it up. Do you know? Yeah. And it was a little bit, and so in the end, we set this rule where if you get to the end of it, I will adjudicate whether you've blown that up because of that target or because you aren't ready.
And all it took was probably one bad trade to send him into that spiral.
Yeah. And I think so when I say targets, it could be like, you could have worked with me and I've said, right, to go from sim to live, you need to do this. But I've had other people who, like, we've got this trade calendar analytics, and it's got green and red, green for a winning day and red for a losing day. I've had people blow up accounts just trying to get that. They've got every day green on the calendar, and they're trying to get the last day of the month green as well. So it's all green, and they blow up their account.
Yes.
That's not even That's not real. Go on,
I've
go on.
done
What
that.
did you do? How did you? Go on, John. How did you do that?
You know why? Because you're putting that pressure on yourself to keep the streak going. If that last day you start with a losing trade and the next trade is a loser and the next trade is a loser, you don't care about the money. You just want to keep that streak going.
Yeah.
So you'll just beat yourself into oblivion trying to get to that green day. Now, I have a trick.
Go on.
When that happened a couple of times, I'm not saying I blew up the whole account, but I blew a lot of hard work throughout that month. When I start having that pressure of keeping a streak going, I break the streak.
On
I
purpose.
take a day off.
Okay.
The streak is over.
Yeah.
Now, there were periods of time when I had a daily profit target that I was trying to get to, and I could get to within 2 or 3 ticks of it. My clerk could say, "Hey, you're there. Why don't we just go?" And I'd say, "Let me pick up this last couple of ticks." Famous last words.
Yeah. But like the thing is though, and this is important for you guys, because even if you don't go on the downside, let's say you're never in that situation where you're nearly blowing up your combine account, or you're $500 away from blowing up your live account, you can't avoid having targets. I mean, you like the whole Topstep thing, John, is targets, right? Like you can't. And when I tell somebody to go live, you've got to have some kind of target that says, if I do this, I can go live, right? You can't just go live to go live. You know, it's like, how do you not have targets, but stop them defeating you? Okay.
So what I tell people when they are getting close to a potential successful step 2 or step 1, or they're getting to a level of an account balances they've never been before, I tell them, don't just forget about that. Every day you start from 0.
Yeah.
If you start from 0 every day and you stay with the process that's been making you money, you will get there.
But what do they really do? Without you, what do you see people doing in reality?
Well, we have people that succeed in the trading combine all the time. They get funded. As for their strategies or what they're doing, sometimes they just get lucky.
Yeah.
But that's okay. What bothers me is when somebody gets in their own head and starts destroying what they've worked so hard to accumulate.
Yeah.
Because they have to make it that day. I find that financial targets are counterproductive.
Yeah.
It's the target should be to stay in your process straight, stay in your strategy. Don't trade too big, just stay humble, trade every day like you're starting from 0. And if you really believe that, you're going to be a much better risk manager. It's all about risk management. You get to 2 to 1 reward over risk and be right half the time. And if you can maintain that metric, you can build an empire.
Exactly. Now I'm going to ask you stats, but it's not exact stats, but like gut feel. Are there many people that will pass the combine on the final day, or are they usually doing it before the end?
Well, it's always the final day. If they pass the combine, they're moving on.
Oh yeah, but you could reach your targets like 2 or 3 days before and keep your hands off, right?
Okay, step 2, there's no longer a time-based requirement.
Oh, okay.
So it's the consistency score that you have to meet.
Yeah. Okay. So then the time limit doesn't get there, but it is
no.
It's the time.
And there's no limit to the number of days that you can trade to your target. It's getting to the target is the point. There's no limit to the number of days you have to get to it.
Yeah. And what about like, I presume there are some people who just keep doing it, who have the skill and keep doing it over and over again because they can't get over issues like this, right?
And that's what the beauty of it is, they can continue to work on getting over those issues.
Yeah. Now, guys, in the room, do you guys recognize this at all? Can you guys like tell me if what kind of targets you've set that have screwed you, or are you guys all target immune? because there's so many different kinds of targets, right? Could be just like telling your wife, I'm going to have a good day today. And just having that hubris and now you've got to do it. Right. So
and that's dangerous.
It is dangerous, but it's really strange. But like, to me, you have to get on top of it. Right. So Aaron's, he says he's passed multiple combines, then gets too focused on trying to widen the gap of the max drawdown. So he's like, again, you're focusing on that line of, doing that one thing. I mean, if you're going to do that, focus on widening the gap of the max drawdown, you should do it right from the start, right, Aaron? So is that a change, Aaron, that you make once you passed? No, we know Steve, so just waiting for Aaron to get back.
Yeah.
But again, so he's like, he gets to the real thing and then he wants to give himself this buffer. But if you're going to build that buffer, you need to be doing that all the time, right? So
Sticking with the strategy, sticking with the process.
Yeah. And it restarts when he gets his live account. So Aaron, you should do it all the time. If there's a behavior or something you need to do, it should be with you all the time. Right. But this is amazing. It seems to me a bit unfair that targets push you away and and the other one pulls you in. Sorry about this.
Loss limits suck you in and targets repel.
Yeah, right.
It's just human nature.
It is, but it's not fair, John. It's not fair. Why is it whenever you put a trade on accidentally, does it lose?
What's fair?
We'll just toast or land upside down. It's like that, isn't it? So I got some suggestions, John. I know you have coaching.
Go for it.
Yeah. Because like my opinion, I mean, guys, are any of you are there any people in here that weren't aware of these issues, that maybe you've been getting hit by them, but you didn't realize? Because I got some thoughts on this. Is like, first of all, you don't panic. If there's a risk increase and you start to panic and it throws you, you got to try and chill out. But if it does throw you, you have to kind of step away, right? You can't, if it's an increase in size or go into a live combine. So to me, if you go to a combine and you get to live, you might want to reduce the size a little bit just to like give yourself the buffer, because it's got to impact you to some extent, but people do get through that. So Jeff's saying Jeff wasn't aware this is common. Are these things common, John?
Sure.
Yeah, absolutely.
I mean,
so I don't.
If you're a human being, we all deal with this to some degree.
Yeah. So I don't buy into this thing about just get back on the horse. I think what you have to do is, like, if you feel that panic or you feel that different state or you behave differently, if you catch that before it like gets you, then you're in a better situation. You've got to catch it, but you've got to look at yourself. Why are you acting in that way? Right. So for me, if I was somebody going from sim to live, you got to trade the minimum size. And for me, if you're going to go to it, if you get funded, and I don't know if it's against the rules, I would trade less size as well, just to get through that periods. And also, but if you are close to a loss limit, it pulls you in. You've got to like understand that, like what the triggers are. What's that feeling that's pulling you in? Why are you doing it? If you think it's blown, if you've got $1,000 in your account and you can't afford to refill it, just take the $1,000 out. I don't think there's any upside in blowing it. You can, if you can't start reacting properly, or if you can't just go back to your default behavior, or well, maybe your default behavior wasn't that good, or you wouldn't have be so close. But you have to kind of be mindful of this stuff, and sometimes just knowing about things helps, but you can't just brush it off. I don't buy that at all. And if you revert to that behavior, if you keep getting pulled into a loss limit, then you got to try and figure out what's going on, because it'll keep happening, but I think the targets are worse, because you might get better and not be in that loss limit situation, but being in a target situation is quite common, even if it's just the money for a car or a holiday, right?
Sure.
But I think the idea that so really this event's really just to say, look, there's a couple of things really that this is about. It's like, what, you can get an accountability partner, you can stop for the day when you revert to poor behavior, but you got to know that these things exist and that they're a part of trading, so that you, at least maybe when this starts to happen to you, you can say, oh man, I remember that webinar where they talked about this. Maybe I need to, instead of just like dusting myself off, I can, I can do something about it. And then the other thing is I kind of squeezed, I squeezed Topstep for this. I said, let's do a webinar, but I want to squeeze something. I would like, if you've not done this, if you're on Sim, I've asked Topstep to give, anybody who's not Topstep customer yet can get a free combine, any size you like. And the goal would be to hopefully not go through the month in the middle to either get close to a target or get close to a loss and actually experience some of this yourself and experience the change in behavior, right? So it's not really just about Topstep, but what amazes me, John, is the step 1, the step 2, and the behavior changes. It's like, it's like Topstep model it's not sim and it's not live. It's quite abstract from that. And people behaving exactly the same way as if it was real money, right?
It's that skin in the game. And, step 2 is there to really prepare you for the change from going from a combine trading account, which is a sim, to a live account, to a funded account. It is daunting. It is difficult to remain calm and make the same decisions you were making in Simmer and the trading combine in a live account.
But it's all perception, right? It's
perception.
Like if it's a live account, I get it more. But what we've been talking about over the past 3 weeks, it is not any different from people trading a live account. I just find that very interesting. Now,
100%.
if you're already a Topstep customer, John's gonna, if you go to the same page, you can either get a free combine or you get a free coaching session. And John or one of the people that works for him is going to ask you why you're not funded yet. And probably sort some of these issues out for you. But it's
we have free coaching sessions, group coaching sessions every Monday and Wednesday at 1 o'clock Central Time. I welcome anybody and everybody to come and ask your questions. Yeah. I don't pretend or act as though I know everything. Nobody does. Well, maybe Peter does. But
I'll give you that $100. Thank you.
Conversations there.
and that's great. And so guys, if you got any questions at this point, so really this session was just to tell you, about these issues. There isn't just you, but don't just get up. You've got to understand everybody's going through this, and it's a big part of what you're doing, right? And if you go from sim to live, you've got to, as long as you know this is going to happen, you're not going to be pulling your hair out, right? Which I think is the key thing, really, John. Right? If you know these things are the norm, then it's. I think it's easier. Now, one of the questions, somebody's trying to send you a gotcha question, John. James Fox keeps asking, can you pass your own combine? How different was it in terms of the combine that Topstep run and like the different styles of trading you've done before? How much do you feel it differs in terms of like rules and, ability to make money?
Well, I can pass the combine sometimes. But I'm not necessarily trading with those same parameters. I try in my own trading to stick to the rules and parameters from about the 100K combine. So, I have a $2,000 daily loss limit. Do I ever get close to it? Probably not. I've learned that if I start the day and I have 3 consecutive losses, I'm probably not going to have a very good day. So I'll step away and wait and maybe, see if something else comes up. I
agree with that. I mean, that's what I tell people, because it's just like sometimes, and I see it in the professional side as well, that sometimes you can tell it's a terrible day. Sometimes you can't. Big. Yeah. Go on.
I don't trade big. If I put five E-minis on, to me, that's a lot. That's a pretty decent size. And that's a one lot in the pit. We used to throw those around like nickels.
Yeah. Yeah.
So, it's a different game now that it's on screen. And my dad told me a long time ago, I'm in the pit and I'm a onesie, twosie trader. And I'm like, I want to get to be a 10 lot or a 20 lot trader. He said, I know a lot of guys that have made a lot of money trading 1 and 2 contracts. You don't have to push it. There's money here.
Yeah. Yeah. Absolutely. And it was a different game as well, wasn't it?
Oh yeah.
But,
Yep.
Anyway, so guys, there's your link. I'll put the link in the chat as well. I would like to do a follow-up webinar where we share some of you did as you got close to these things. And if you reacted any differently because you actually knew that you would react, you know, because I think this is really important and I've seen a lot more of this lately, you know, just because, you know, some of the things that people are doing are just things I didn't experience myself, and I'm working with them, and you have to keep finding all these ways, John, right? To almost fool people into doing the same stuff that they were doing that made them successful. Right. It's almost like playing mind games with people, right?
And well, I mean, the psychology of trading is huge. You know, if you go on our YouTube page, I talked to Dr. Andrew Menaker, who's a trading site. He's a psychologist. He's also an active trader. Just did a bit with him yesterday. That's going to be on our YouTube channel. Knowing yourself and knowing, you know, the psychological weaknesses and strengths that you have, and being able to maximize those strengths and try and you know, chip away at those weaknesses over time. It's you know, I don't know how anybody doesn't think about their psychology when they are actively trading. It gets so deep into who we are as a person, and yet we can't add who we are as a person to our P&L. There's so many different paradoxes in trading. You know, if you get into trading to chase money, you're going to chase money. You ain't going to make any.
Yeah. Yeah, it is a bizarre game. So guys, I hope you learned something. If you do take the combine, really would like to hear about people who got close to either the target or the loss limit, because I'm really interested to see how you react. And maybe sometimes, so I'm not a psychologist. I'm never going to pretend I am. I just find this really interesting. And the thing is, all of my life, I've been a kind of I've been like a boss. So my answer to everything is like, well, stop it. And apparently that doesn't work. But I tell you what, with the guy with Soon, you know, the guy that we talked to last week, we talked to him on December the 1st, I think it was last. That guy, he now understands, and we'll see soon. He was really confident that he had something he could lean on, and we've now got him to the point where he knows a certain thing he's doing probably isn't as valuable as he thought it was, and that's going to be a really big step in helping him to move forward. You know, to never be looking back and thinking, what if that was the thing, and and just giving people a way to find stuff out for themselves. And this is just one of those small things in trading that I'd rather you found out from us before you find out yourself, right, John? John, any final words for our audience?
Stay humble, stay grateful, stay creative, take your time, trade smaller than you can, risk not thy whole wad, and try. You know, you gotta make it through the tuition, and I believe anybody pretty much can do this. It's a matter of making the right changes internally and externally.
Yeah, it ain't just about. It's not just about working hard, is it? It's not just about gritting your teeth. Yeah, brilliant. Thanks for your advice. We have to do this again because I like speaking to you. And like I say, I know John's legit because he walked me through the pits, the CME floor. Everybody knew him, and nobody spat on him, which means he's probably a decent guy.
Not on purpose, anyway.
Brilliant, John. Thanks for your time, John. And I'll let you know when the recording's up, guys. I'll put a recording up. It should be up in by this time tomorrow. And if you do the combine, good luck, and let me know how you get on.
We're looking forward to your success, Peter. Thank you very much.
Thanks, John. Bye.
Bye now.